welcome to TheoTrade. This is Don Kaufman, June 8th, 2020. Minutes left inside of today's trading session. The S&P is up another 38.50. I don't know, we're starting to hit here the bullish point of no return. Well, I'll tell you what, we're going to look at a bunch of different underlyings. I mean, I could start naming them off right now. We could look at Hertz, we could look at United Airlines, we could look at American Airlines. Hey, you got to recognize stuff like Hertz. I mean, the company just filed bankruptcy and the stock is up just massively. But push all of that aside for a second, because I think we're going to get a much clearer indication, okay, of the market as a whole by looking specifically at one product. And that product is going to be none other than the XLF, which is the financial sector ETF. The next thing I kind of want to detail to you, okay, is a line across the screen. Now, for those of you that have actually tuned in for a considerable period of time here at TheoTrade, we've talked about that specific level here in the financials, okay, for years. That level is none other than 26.50. Now, just to clarify, above 26.50, any trade above 26.50 inside of the financials, okay, was met by a bullish indication of the entire S&P 500. Under the 26.50 level was just hideous sell side activity. The irony is right now we're pretty much on it. Again, what we're kind of terming the Maginot line inside of the overall marketplace. That's a level that you're going to want to keep a very close eye on. And it's such an irony that we're sitting literally on 26.50. First of all, okay, I got to tell you, I'm absolutely just dumbfounded the fact that we got back there 26.50. I mean, this rip to the upside inside of the financials is completely unprecedented, but I find it kind of ironic that we're coming into an FOMC announcement this week, okay, a really pivotal kind of time in the marketplace. Obviously, we're hitting like inflection points left and right, okay? It doesn't matter how bullish you are in this marketplace, right? Even the most bullish of bulls are still sitting there. They're like, this is getting insane. This is getting dangerous. And that's why I'm kind of terming this video, you know, the bullish point of no return. Because again, day in and day out, you just chugged the upside. And again, even those of you that are wildly bullish are still looking at this and going, all right, we may have actually hit, insanity levels. But again, okay, to keep your wits about you, you're going to have to look at something. And that's something for me right now are those financials. And as long as those financials, okay, are pretty much at or around the 26.50, all right, we're fine in the marketplace. But again, you must keep eyes on them. They start to spurt back up to the 27, 28 level. Listen, you got legs for that marketplace to continue to move to the upside. And I may be bearish in the overall marketplace, but I'll tell you again, I'm using this, okay, to kind of justify a lot of my positions here, especially throughout the course of this very pivotal week. Not too many people expect that much out of the Fed, but that's neither here nor there, okay? Forget for a second about what the Fed's going to say. It's all coming down to the bond market. So what's interesting about trade today, right? So yes, you do have the financials sitting kind of at that marquee level. And they were literally skirting the 26.50 level all throughout the course of today's trading session. But what's really unusual, and why I'm kind of calling this, the bullish point also of no return, is take a look. What does not make sense, okay, in this picture today? And for those of you, again, this is, a little bit more of an experienced question. What doesn't make sense in today's picture? Number one, that doesn't make sense. You realize you have the volatility, not only the volatility futures, but the VIX up pretty considerably with the markets up. That's one of the indications of like things are getting a little nutty. How about this? Okay. You also happen to have bonds higher, okay, with the S&Ps higher. Like, okay, that can happen. Yeah, but the bonds rallying did not have a negative implication to the financials. Therein lies kind of a big question mark. Now, again, the financials are kind of running the roost right now, right? The financials are up some 1.8%. At the exact same time, though, stand back because you have to look at the energy sector. The energy sector exploded up another 4.5%. On top of it, okay, oil and gas ETF, this is the XOP, okay? The XOP was up to the tune of almost 13% today. So much so that I've actually carried a bullish position here in the XOP and I went ahead and exited my bullish position today. So what we actually had today was, okay, again, what we've been seeing a lot of, financials, okay, plus ultimately what? Energy equates to a higher marketplace. Now at the exact same time, the monsters of tech, now these big boys in terms of technology, they were really soft at the cash open. This doesn't look like that much, and sometimes like charts, that just doesn't necessarily do it justice, right? They backed off a little bit and then they ripped. These were phenomenally large moves. I mean, you got to realize we're trading, 97.60 all the way down. Okay, almost a 100-point move down before actually ripping back to the upside. However, I guess the irony of that is big technology was actually the laggard today. And it actually has been the laggard kind of day in and day out. So again, an extraordinarily unusual day where, yeah, the sector rotations are much of the same, but the fact that bonds are up, and by the way, bonds, they are back, okay, in business. They're trading some fairly substantial size, okay? Bonds are up. Volatility is up. If I scroll to the bottom of my screen, you have like the short-term VIX, the long-term VIX, and the VVIX. I mean, the VVIX literally closed at roughly 110. In fact, there is the print, okay? As I'm actually bringing it up, the VVIX literally just printed, okay, into the 110. For those of you unfamiliar with the terminology, anything north of 110, we kind of turn the VAMA zone here, which is, hey, that is an extreme reading inside of the VVIX. So at this point in time, again, when you're seeing the marketplace with just incredible moves to the upside and incredibly bullish moves to the upside, now I think it's time to look at some individual stocks. And the reason I want to bring some individual stocks into scope is I think it highlights, okay, and emphasizes, if you will, the insanity, okay, surrounding some of the bullish moves. I have to start with Hertz. Hertz Global Holdings, which is effectively and has filed for bankruptcy. Well, there, come over to the chart because it'll do it much more justice. Stock's actually up 115%. Okay, moving on from there, any of your airline stocks, okay, United once again today having another 15% move to the upside. American Airlines, okay, again, much of the same, about a 9% move to the upside. Boeing, all right, I actually carried an intraday position on Boeing today, up approximately 12% on an intraday basis. This is following, again, other staggering moves. In fact, I'll stop for a second and detail Boeing here because Boeing is the clear driver, of course, of the Dow. I mean, the Dow is up, 444 points. That's very much in large part due to the fact that Boeing is up some 25. Again, the Dow, okay, is weighted very differently, and it has nothing to actually do with the sheer magnitude of the company. The Dow is actually weighted, okay, based ultimately on what we call a Dow divisor, and Boeing happens to be one of the biggest products inside of the Dow. Nevertheless, without going into too much detail, just the last couple of days, you're looking now at 1, 2, 3, 4 trading days. We were down 55%. We're only down 30%. It's 25% rally inside of a marquee stock like Boeing. Again, I could go all day long over here, but I also find it interesting that even retailers are starting to play into this. This is actually Macy's. What is not necessarily receiving any love are products like Lululemon, which is for the first time in quite a long time actually flattened out a little bit. But that also could be prior to their earnings announcement. Again, everywhere you look in this marketplace, you're seeing degrees, if you will, of excess. And I caution everybody on this particular front. It's not because I'm necessarily carrying bearish positions. As I said a moment ago, I've actually got bullish positions inside of the energy sector, and I worked out of many. I am now out of many of my bullish energy sector positions, specifically inside of the XOP. I've also, okay, teed up and actually added ever so slightly into a bearish position today inside of Apple. I mean, listen. The stage, okay, and the dinner table is set at this point in time. I still believe that the risk rewards are absolutely phenomenal inside of this marketplace. Okay, that bullish point of no return, well, keep your eyes inside of those financials and specifically at the 2650 level, because that level is going to define this marketplace moving throughout the course of this week. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.